Hey everybody, how's it going? It's Russell Matthews here. Now we all know that in many Canadian markets, real estate prices have absolutely gone through the roof, but there are signs that this could be changing as new reports have just come out from various analysts suggesting that measures to cool the market and to slow it down could be coming sooner than we might expect. So we need to take a closer look at what's going on. But before we do, make sure to check out the links in the description where you can open your own investing account and take your wealth into your own hands. And also, if you haven't already done so, hit the subscribe button and notification bell to keep supporting more Canadian content just like this on YouTube. The first risk to Canadian house prices is the creation of new policy. Now, this is always a risk. Governments can come in and create new policies that slow down the market, but it seems that this is becoming more likely as many big bank analysts are predicting that these changes could be coming in the next couple months. Derek Holt, Scotiabank's head of capital market economics, says that the upcoming spring budget could include new cooling measures for real estate, and he highlights how policy has been overly loose and that we could see these measures very soon. Now here he's making reference to the upcoming spring budget that the federal government is set to release in the next few weeks. We're waiting on Finance Minister Chrystia Freeland to finally put together this report so we can find out what the future of Canada is, at least from an economic standpoint. And other economic analysts have weighed in, saying that options for these regulations could include a flippers tax paid by people who sell houses quickly after purchase, or changes to mortgage qualification rules, and this is coming from Benjamin Tal, who's CIBC's chief economic analyst. The first option that Benjamin Tal brings up there is the flippers tax. Now, many people will already know that there's already some taxes charged to people who are doing this house flipping procedure, right? There's capital gains tax, as well as if this is your business and you're constantly flipping homes, that will also be taxed as income tax. So some taxes already exist for this type of investment, but I suppose he's suggesting here that further taxes could be added on top of this. Now, this highlights the narrative that's in a lot of people's minds that it's the fault of investors that the housing market is becoming so unaffordable, but he doesn't really point out the record low interest rates that are causing so many people to be able to enter the market and to pay higher prices for their homes as a result of these lower rates. He also mentions the idea of changing the mortgage qualification rules. Now, if you remember back to 2017, at that previous peak of Canadian real estate prices, they implemented something called the mortgage stress test, which forced buyers to qualify for more house than they actually were able to go out and buy. So these are just some of the regulations that could come into play if politicians see that these measures are necessary. But what's really interesting is the response of the governor of the Bank of Canada. Now, he was asked about whether or not the Canadian housing market actually needed these kinds of regulations to be imposed. Let me show you what I'm talking about.
You said during the Q&A portion of the speech that you're starting to see signs of excess exuberance in the housing market. Do you think Canada needs new measures to rein in the market? Perhaps something like the lending restrictions on investor buyers introduced by the Reserve Bank of New Zealand?
Now, before we get to his answer, you'll notice that she asked the question about whether or not we should bring in these regulations similar to what's going on in New Zealand. Now, after doing a little bit of research and digging into this, I actually found some pretty interesting information about what's going on in New Zealand right now and how it could potentially parallel the future for Canada. Just like in Canada, since the beginning of the pandemic, New Zealand has seen an absolute boom in increases to home prices. And again, just like in Canada, it's causing a lot of frustration among first-time homebuyers who are finding it increasingly more and more difficult to get into the market for the first time. And this social pressure that can sort of bubble up when there's a group of the population that is frustrated about something, this is something that is more likely to push forward future government policies. And what's happening in New Zealand right now could be giving us hints about what's set to happen in Canada. You may remember that New Zealand has done significantly better than Canada when it comes to controlling the pandemic, and as a result, they were able to open their economy and get back to at least some level of normal a lot sooner than we have here in Canada. As a result, people have been able to go out, spend more money, and some of that money has been put towards houses, sort of exacerbating this same issue. Again, similar to Canada, the New Zealand government was able to support its citizens with programs that look a lot like the CERB or the CRB here in Canada, these direct payments to consumers. And that has been supported by a lot of money printing or new money added into the system. Now, if you haven't learned about what's happening here in Canada and how we're adding around $4 or $5 billion every week to the system, check out the video in the description where I go over that in more detail. So what are they doing to try to solve this problem in New Zealand? Well, in New Zealand, their Finance Minister Grant Robertson directed their Reserve Bank to take into consideration the impact on housing in setting its monetary and financial policy. They want to aim for more sustainable housing prices and to dampen investor demand for existing homes to improve affordability for first-time buyers. Now let me explain why this is significant. Typically with a central bank like the Reserve Bank of New Zealand or the Bank of Canada here in Canada, their main goal is usually to keep inflation around a 2% mark, and they'll use various different information to sort of measure this and to affect their policy decisions based on this information. Now, nowhere in the Bank of Canada's mandate is there any information on their responsibility to consider what this could do to housing prices in the country. Many critics believe that the decisions made by the Bank of Canada is what is largely propelling this huge boom in housing prices and is sort of stretching the wealth gap between the poor and the most wealthy. But in New Zealand, the finance minister, the sort of counterpart to our Chrystia Freeland, said, hey, we're going to change the mandate or change the goals of the central bank. It's not just supposed to keep inflation at a 2% level. No, we want you to consider the effect of your policies on housing prices. The idea is that in the future, before making these decisions that could cause housing prices to go up, that the central bank would have to think about these decisions and consider them before actually implementing the policies. Now, it remains to be seen on this if this will actually be effective or not, right? There's a lot of criticism of this decision saying that, hey, the finance minister is just sort of passing the buck. He's using the central bank as a scapegoat for a failure of the government to solve the problem. And people are saying, hey, the central bank, this isn't their job. This is your job. Don't say that the central bank is the one who needs to make up for your potential mistakes. They also say they're going to heavily focus on making sure it's more difficult for investors to get into the market to buy their second home or third home or future rental properties. Now, a lot of critics have said this is more of a band-aid solution because it seems the real problem is the low borrowing rate, along with other policies that makes New Zealand a little bit different from Canada. You see, they currently don't have a debt-to-income ratio when it comes to qualifying for a mortgage. This allows a lot more people to buy houses, even though they may not have the income to entirely support it, at least in comparison to Canada's guidelines. But what does the Bank of Canada think about all this? Let's take a look at Tiff Macklam, the governor of the Bank of Canada's response to that question we saw a little while ago.
Do we need measures right now with respect to housing? I think right now, economy is weak. We're just coming out of this second wave. I think we need, we need those. We need the support. We need the growth we can get.
Although he goes on to say they're beginning to see a little bit of froth or excess exuberance in the market, it's pretty clear that the Bank of Canada isn't too concerned about lowering or at least cooling housing prices right now. In fact, he actually says, hey, we need to take the growth we can get, sort of hinting at how important the constant growth of real estate is to the Canadian economy and how much this sector, this one sector, supports the entire Canadian economy. As for whether or not the regulations we talked about before, like the flipper's tax or making it more difficult to qualify for a mortgage, whether or not those are actually going to be implemented, and whether or not the Bank of Canada could actually be mandated to have to consider housing prices when they make their fiscal policy decisions, that remains to be seen. And what we're really waiting on here is the federal budget. Now, the Liberal government here in Canada hasn't put forward a budget in over 700 days now, so a lot of people are waiting and sort of questioning why this budget hasn't come out and what we're actually going to do as a country going forward. Where are we going to spend our money? Are we going to continue supports like CERB, create a universal basic income? These are all topics that could be included inside of that report, along with any sort of cooling measures that could be applied to the real estate market to sort of try to tackle this affordability problem that's happening right here in Canada as we speak. So if you want to stay up to date on the information when it comes to that budget and know as soon as it comes out, make sure to subscribe to the channel, because as soon as we have any new information on that, I'm going to be bringing it to you right here. And even if new cooling measures or new regulations come in inside of this budget, there is a risk of a looming federal election. Now, if there was an election called, it's likely that we wouldn't have any new bills passed through the House of Commons. So even if there are these new regulations, it could be less likely for them to actually pass and get pushed through the government because of this looming election that we think is coming up in the next few months. So there are still a lot of question marks when it comes to the Canadian housing market, and I'd love to hear what you think about all of it. Have you had any experience in the housing market over the past while? Let me know down in the comments, and if you want to have a personal conversation, you can join our Discord community. I'm a realtor in the Greater Toronto area, and I'm constantly answering questions and sort of having discussions with people in there, so if you want to hop in and talk real estate with me, feel free to do so. There's a link in the description. And of course, if you haven't already done so, check out the links in the description where you can open up your own investing accounts and take your wealth into your own hands. And as well, if you haven't already done so, hit the subscribe button, notification bell, and tell YouTube, hey, I like seeing Canadian focused content right here on the YouTube platform. Okay, well, I hope this video helped you out at least a little bit, and I'll see you next time. This channel is supported by viewers like you. Thanks, channel members.